There are things that are very hard to measure. One of the things that's hard to measure is the concept of fear. Everybody's concept of fear is different. You can always have a scale of 1 to 10 of what it is, and for every single person it would be different. Personally, I think there are probably thousands categories of fear. There's all kinds of fears. There's concerns, there are paralyzing fears, there are legitimate fears, there are fears that make you think better, there are fears that are paralyzing, there are all kinds of fears. But it's very hard to measure fear. The other concept that is hard to measure is greed. Everybody's concept of greed is completely different. Some greed makes you extremely motivated and build things, and it works very well. And there are types of greed that are absolutely destructive. So it's very hard to measure greed and to say what is good greed and what is bad greed. Just the same way that it's very hard to say what is good fear and what is bad fear. I think personally it's a very individual journey of exploring it. The other concept that nobody talks about is the concept of luck. You can't measure luck, and yet it plays sometimes a really big role in one's success as a one-off event. But it's very hard to measure those one-off events. So you're juggling those things, right? You're juggling fear, greed, luck, and all those concepts clearly apply to the market. But my point is, again, that it's very, very hard to measure them. So, what I find so fascinating is that people love and are attracted to concepts that they try to study, and it's very hard to study them. In fact, 99% sure that they can master it. And because of that, they get attracted to concepts that are impossible to master in their trading. For example, you would have an absolute amateur guru on the internet, on Instagram, or on Facebook, or on YouTube, or in his own video that he created on his own site. He would say something like, the trend is your friend. And all the amateur traders, they just stand there and applaud him. Oh my God, what a great teacher. That's right, you have to trade with the trend. Or they'll say something like, cut your losses short. And everybody's like, oh, he's so right. If I could just cut my losses short and just let my profits run. Run where? Run to Mount Everest or run to the Himalayas? Run where? To Peru? Where do you want your profits to run to? So all those concepts that are admired out there in the marketplace are not measurable. They're just sentences that make us feel good about trading, and they're totally taken out of context. So, if somebody says, the trend is your friend, all right, well, what you should do is try and measure the trend, right? What is the trend that you're trying to measure? Is it a day trend? Is it a long-term trend? Is it a short-term trend? What is the trend that you're trying to measure? So a lot of people say, well, trade with the trend. Well, we had the NASDAQ not long ago breaking 12,000, and you could have traded with the trend. and then it corrected 5%. So again, quantify trend. Tell me, what trend are you talking about? When you talk about concepts of cut your losses short, okay, well, quantify it, because just cutting them short, sometimes it's not letting the market breathe, right? You have to let the market breathe. If you're in a highly volatile environment and you're just putting very small stop losses, clearly they will be triggered, right? So consider that. Also, when they say let your profits run, well, in a choppy market, where are you going to let them run? There's nowhere to run. You have to allow for a market that is highly volatile or a very strong trending market in your time frame. I'm just repeating it. It's a trending market in your specific time frame that you should let it run. So, what you need to remember about all of this is this, right? What you want to remember is that if you want to go from an amateur to a professional, just don't be a clapping penguin out there. Just don't admire every single thing that you read, because the easiest person to persuade of something is an amateur. And with concepts that you would think are so good and so unique, and yet you can't apply them. One of the sentences that really irks me is when somebody says, I'm invested in my indicators, right? Especially ones that he didn't build, right? He doesn't know how to measure them. He's looking for this vague signal that has no risk management whatsoever, and you can't measure, right? Because it's just a combination of some sort of obscure kind of technical analysis that you think are unique because your guru said that they're proprietary indicators. That's nonsense. Some of them just take regular technical analysis, combine it all together into some salad, and call it proprietary. There's nothing proprietary about it. It's just a combination of things. So, again, the point of all of this episode is to tell you this. Ask a question. How is this quantifiable? How can I turn a concept into real numbers? What does it mean in its application? Once you start asking that question, what you will see is a total shift in the way you think about the markets. You're no longer that sheep that just goes around from one guru to the next guru, from one chat room to the next chat room, from one YouTube to the next YouTube. Rather, you're going to be a thinking trader. You're going to ask again the question, how can you quantify it, right? So the next time somebody is talking about those vague concepts, you're going to say, well, can you quantify it for me? Can you tell me exactly the risk management that you use? How many points are you trying to take away from the markets? How much are you risking to get those type of points? Under what environment are you trading? How volatile is the market? What sort of range does the market have? So everything has to turn into real numbers and not just vague things out there that nobody can make anything out of. That's it for this episode. Just want to remind you that trading futures is very risky. I'm not here to promote futures trading or forex trading or equities trading. I'm just here to help those that are engaged in the markets and are trying to put a lot of effort into trading it. So there's a lot of risk in futures trading. Past performance is never indicative of future results. When you put stop losses can be triggered way above or way below your stop loss. depending on the type of stop that you use, a buy stop or a sell stop, because market conditions might be very difficult and might not let you get out of the market at your specified price. That's it for now. I hope you enjoyed this episode. And if you want to visit our site, you're always welcome. It's www.optimusfutures.com. Again, it's www.optimusfutures.com. I look forward seeing you on the next episode. Thank you.